So, Mr. Khan, from where we stopped, so we're going to continue from where we stopped, looking at the Euro GBP pair that you marked out the structure and you had some questions in regards to that. And we started looking at the structural mapping where we saw the break of structure here. You clearly pointed out the inducement. We saw price to cut the inducement, creating this lower high, and we saw the valid impulsive movement that broke this, and we saw also the inducement here, price swept the inducement, and we have the bullish movement that gave us the market structure shift. So we have to identify what sponsored this bullish movement to the upside. So what you can clearly see is that price returned to this order block. So we have this order block here. Let me make the screen broad so that you can see that we have, this is our order block zone here, because here we have price giving us bearishness to the downside, but this last down close candle sponsored this bullishness to the upside, taking out this high point, taking out this high point. So now we can see how price again returned to the origin. So price returned to the origin. We have this accumulation here. So price took out the liquidity resting here, because here is the origin of this impulsive movement. This is the swing low point. So price returned to that, mitigated that, and after price mitigated that, the impulse to the upside that gave us this market structure shift. So you identify the structure, and then you have few questions which you're going to look at, right? So you saw how price gave this bullishness to the upside. In the structural mapping, you shared your screen to me. We also marked out this inducement, price to cut that, giving us a valid higher low points here, and we had this movement to the upside that broke structure. This is the candle that validated this break of structure. So here we have an inducement, price again pull back, taking out the low of this candle. We have the inducement again from here transferred to here. So this becomes our engineered liquidity. This is our inducement. So we can see how price traded to the downside, taking out this low, this inducement, taking out the engineered liquidity. And I pointed out the fact that we saw price return to this rejection block. So what we can see is this is the down close candle that took out the sell side liquidity, and it is from this swing low we have the bullish movement here to the upside. So price returned to that, mitigated that, and we saw this bullish movement, but price failed to continue bullish to take out this high point, giving us a what? Failure swing, which I pointed it out to you. So we have a failure swing here. This is the newly created higher low point, but this higher low point failed to sponsor bullish movement to take out this high. So price fell to the downside, taking out this low. A market structure shift here established for us, and in extension price took out this low points. So what we can see here is we're not really bearish, we are bullish, as long as price have not mitigated this zone here based on the 4-hour structure. So what you're seeing from the 4-hour structure is that we have the market structure shift from this swing high point, and price gave a massive impulsive movement to the upside. So, and I told us that you can see how price took out this trend line liquidity, this impulsive movement took out this trend line liquidity, price traded to the upside into this rejection block zone, and now sponsoring what? The bearish movement to the downside. So the fact that we are having this bearish movement to the downside doesn't mean that now we are in a bearish market condition. What you need to do is to identify the drawn liquidity to the downside that this is aiming to trade into. Because what we can see is that price did not mitigate this high that was violated. So we have the possibility that price may just trade to this high point, and then we have the bullish continuation. So basically, this is just a temporal sell movement to the downside, because we have this unmitigated high point, and what you can see, we also have this down close candle that sponsored the bullish movement to the upside that broke this high, giving us the bullish market structure shift. Yes, here we have the bearish market structure shift, but we know that here price retested this bullish order block that sponsored this bullish movement that broke through this high, and this high, and we can see it swept this high points. So this movement to the upside invalidated the continuation of this bearish movement. Are you getting it? So after price now swept this high points, this bearish movement did not continue bearish to take out this low point. Price reacted at the bullish order block and gave this bullish impulse. So at times when you're marking structure from a time frame and it doesn't seem so clear, you can now go to a time frame higher than the time frame where you're identifying that structure. So when we go to the daily time frame, let's check the daily time frame. What you can see from the daily time frame also is this. You can see how we have price here trading to the downside, broke structure here. We have this inducement here, price traded, took out the inducement, fell, but here we do not have valid break of structure. This went again to the upside, seek this buy side, fell to the downside. Now we have a valid break of structure, meaning this is a valid high point. Price fell again to the downside. We had this return, price fell, price again return, price fell. Finally, we have a valid break of structure here. Price gave us this pullback, price fell, pull back to the upside, price took out this inducement, and in extension, price swept this high points. So what you can see also here, we have stack of what? Buy side liquidity resting here. These two retail traders will be a resistance level. They can consider this as a resistance level, but this is also stack of what? Buy side liquidity resting here. So what we can now see is now price fell to the downside, but failed to continue bearish. And then we saw this impulsive movement to the upside. So you can see from the 4-hour time frame, we can identify the market structure shift here. So in the daily here, you can see how price traded here, and we have price reacted at this bullish order block that sponsored this bullish movement, because this is the main origin to that. And what you can see is this is the inducement to this. This is the sell side liquidity that if we're seeing price trading to the downside, it will seek this because this is above this bullish order block. And we can see how price traded to the downside, seek the sell side liquidity, fill up this fair value gap, and we have price mitigated this bullish order block, and we can see the impulse. So you can see the impulse. So we have stack of what? Buy side liquidity resting here. So the bearish movement you saw from the 4-hour time frame, with the anticipation that you're going to see price continues bearish further to the downside to take out this low, is not really valid. Because what we can see is this sponsored this movement, but then this newly created lower high failed to continue bearish to take out this low, and we saw such impulse to the upside. And you identify that you have stack of buy side liquidity resting here in the form of what? Resistance, what the retail traders will consider as a resistance level. So we can now see this bullish impulse. Price here in the daily created this bullish fair value gap here. So we have this bullish fair value gap. So the anticipation is to see how price would return to mitigate the bullish fair value gap, and we have bullish continuation, or price may dip more lower to mitigate this breakout block zone. And what you can see is you had this fall, you had this pullback, you had this fall, this pullback, and before we had this fall again, and bullish impulse. So we also have this level to consider. So this also I can consider as a breakout level, but this is the last swing high that was formed. But here we have also the buy movement before the sell movement that took out this, and this is in confluence to this fair value gap zone here. This pullback where we have the buy movement before the sell movement that took out this low point is in confluence to this fair value gap. And when we make use of the fib tool, let's make use of the fib tool to look at where the bullish fair value gap lies. And you can see the bullish fair value gap is within the discount level. So you can see price traded to the downside. So what you can see clearly in the daily time frame is marking this zone. You have the market structure shift here, bullish impulse. We have this bullish fair value gap. So it's to look at the possibility of price returning here to this drawn liquidity, this internal drawn liquidity, the bullish fair value gap, and we have the bullish continuation to the upside, since we've identified what stack of what buy side liquidity resting here. Price created this new lower high but failed to continue bearish to take out this low points. So going back to the 4-hour time frame, Mr. Khan, that is why you can see here that now price just traded back into that daily bullish fair value gap, and within the daily bullish fair value gap we now have the 4-hour bullish fair value gap resting here, and you can see how price traded into that, and the bullish impulse to the upside here. Price return to the order block, and we have what? Bullish continuation to the upside. So I believe the structure to this is clear to you. So when you're marking the structure and it's not so clear to you from the time frame in which you're marking it, you can now go to a time frame higher. One time frame above that time frame, you'll get it clear. You can see here price mitigated this order block, which also we saw it in the daily time frame. Price mitigated that. We can see it in the 4-hour time frame, the last down close candle before this bullish movement that gave this internal market structure shift before continuing to take out this high point. So you can see here we also have that form of what? Resistance liquidity. You can see it here. So price was retesting, falling, but then broke through it. So that is why also we looked at that from the daily time frame. Let's get to the daily time frame. You'll see clearly we also have that resistance liquidity also in the daily time frame, which I pointed the facts of that to you earlier. So we can see we have also a resistance liquidity here, and we can see this created high, failed to continue bearish. Mitigating this order block, you have impulse. So we can see impulse happen here, market structure shift. We're expecting a return, and you can see price return to the daily bullish fair value gap, and we have impulse continuation, bullish to the upside. So this is what you should incorporate when you're looking at the structural perspective. Yes, we have reason to go bearish here. Bearish to where? The daily fair value gap zone. And below that, within the daily fair value gap zone, we have the 4-hour. We can see how price traded into that. Price did not retest this high that price broke. So we have that possibility that yes, price will trade back to it, and we have bullish continuation. So a strong or long-term bearish movement is not established from this delivery, Mr. Khan, because we have price retested a demand zone. So I believe this is clear, Mr. Khan.